Okay, folks, we're going to take a look at the silver market here today. I'm going to go back a long way into August of 2011. I was in Hong Kong, and I was being interviewed by the Hong Kong Wall Street Journal, and they featured my article on the first page of the Wall Street Journal back there in August of 2011. And what I was saying is that the silver market was reaching a major top and would go down for quite a few years. Here's where we were. We eventually went back to $14 many years later. Actually got to 11 for a short period of time. All I did was A, B, C, D. As you can see here, there's an A, B, C, D right there. And it rallied up to another A, B, C, D right here. And then it starts its down move. You notice here silver dropped in 1 week, folks. It dropped from $50 all the way down to 32. That, my friends, is a that's a $9,000 move in 2 weeks. Okay, now let me show you why I thought it was going to be a top. I used simple stuff, and you'll see there was our low. Just get this here. There was our low back here when silver was $14 an ounce back in February of 2010. So that's our starting point. Then what we're going to do is get this up here so that everybody can see it. There's our low right here, and then we draw in the ABCD pattern right here, and as you can see, it goes up to the 1.27 expansion. And the reason why that you have to change that is because when the market goes up like this, you have to add 1.27 to the CD leg. That's what I was talking about right here. And then you can see the market dropped, folks. In 1 week we went from $50 down to 32. Okay, that's 16 times $500 an ounce. That's a monster move. Okay, and then you can see that you just see how the ABCD works. This is weekly. There's your AB leg right here. Okay, there's your CD leg right there. And we'll just continue on just to show you what happened. But move over. I wanted to show you another big ABCD on the long-term weekly. Okay, this is going back to 2016. We were 20. We came all the way down to 14. Just going to draw this in so you can see it. There's your, draw it so we can see a little better here. There it is. Can't get it in there too easy. There's your A, B, C, D leg to there. Then we went up. Folks, we are at the biggest top. And not only that, but let's take a look at here on the long-term monthly, okay? Now here's silver on the long-term monthly. There's where we were in 2011. Silver has not got above the 61% retracement. It's in a few pennies of where we are right now. Okay, so that's not the problem. The problem is why silver should be at least A, B, C, D should at least be at $75 an ounce, and it's not. The reason for that, I don't know. All I do know that everything that I look for tells me that, boy, we are really getting ready for something big in the gold market. Let's just take a quick look at these one at a time, all right? Go back up here and get out of here so we can take a quick look at this, move this out of the way here. First of all, I want to show you, get this out of the way. I think I have to put it all the way down. There you go. All right, I want to show you this. Okay, now this is the open interest, okay? Open interest is rising. In other words, players are coming into the market. But look at the volume, folks. Look at the volume since February 25th. It's fallen off a cliff. We're doing less than half of the volume. And the open interest is going up. That means there's weak hands, okay? Now the most important one is the gold. Now here's gold. We've got open interest volume way up and open interest dropping. When open interest drops and prices go up, that means that shorts are covering. Once that's over, there's a vacuum in the market, and that means we're going to be going down really, really sharply. And as we look at this, we're going to go back and take a really long time look here on the gold market. Let's get up here first. We'll want to go back to gold. This is GDL, okay? This is the ETF for gold. There's the gold shares, okay? Now look, there's going back to just to 2022. There's your A, B, C, D leg measures to 274. It closed at 275. You can see this pattern right here over the last 2 years, 278. It closed at 275. By April, 270 puts, as many as you can, with $5,000. Look at the volume dropping, folks. This is not bullish. This means people are exiting the market. This is not good. See, look, this is bullish. You see the volume going here, volume going here. Bring in the volume. Volume is not coming in. This tells you this is really a weak situation. My opinion, of course. All right, now we're going to go back and look here. All right, here's where we are. This is the gold on the monthly chart. Okay, going back to 2000 when it was trading, it got as low as 238. Okay, that was the low of gold, and then went up and down, up and down. It measured to 2,700. This one measures to 2,900, and here today we hit 3,004. Okay, and as we did that, open interest is dropping, folks. That is not bullish. I can tell you that right now. But here's what I'm looking at on the. This is the daily here over the last month or two. There was our low here. Now remember, folks, this right here, from there to there, that was a $100 drop an ounce in one week. In other words, we went up here and then broke all the way down to here, right there, and then we went up and made another A, B, C, D pattern right up in here. And for the last several months, from February and March, we've been in this massive distribution area. Now look at this. From this low high, so that low to this high measures to 309, and if you measure to this one here, it measures to 306. We close at 296, and this morning it's trading as a high of 305, 3005. Folks, I think we're going to see a drop of about, just because it's such a vulnerable area, we could drop, if we dropped $100 an ounce, we 299 to here. That's not enough. It's got to drop $300 an ounce. That's to hurt people, would be my guess. This is a monster top up in here, in my opinion, if you believe in ABCD. And that's what we're looking at here this morning. So I've got a lot of other information that I'll forward to you over the weekend, but that's the basis of everything that I was looking at here. And just to show you where we were, I think I had one other chart here that that's just the same chart with as one of the others. But it's telling me with the weakness in silver not following through, the volume dropping way off, open interest dropping way off, and all the targets being hit. This is the key right here. This is the key. And if you went, those of you that follow me, you've seen what I've done in the past. So this might not work, but this is a chance. This is a game changer. Okay. Now I'm selling at 30. My thing was to sell at 304 and put a stop at 2024. If we get above 2024, that is a $2,000 risk. But if that $2,000 risk is correct, a 2,000 could become 40,000. I know that seems hard to believe, but I think there's a chance of that. So we'll have to wait and see. All right. So live every day in an attitude of gratitude, and may God bless.